All right. Welcome to this week's live office hours. Casey, how's everything going?
Things are good. Things are good. A little bit of a rainy week here in Boston, but things have cleared up at least for today. But yeah, things have been going well. Things have been going well.
Nice. Nice. One thing I did kind of want to start us off with, I know we talked a bit about this, I believe, in last week's office hours about this whole concept of like a relationship moat in wholesale.
Mhm.
And I actually turned that into a blog post because like this is actually a cool
Nice.
idea. Like this is I've never called it a relationship moat until that day. It just like dawned on me. I was like, oh, that actually makes a lot of sense. So I'm gonna name it. But I basically break down like what is it, how do you build it, what to look for, how do you like, what are things to avoid. um and funny enough, this is a lot of like networking stuff, right? Like I wrote a whole blog post on how to network as an Amazon seller. All that stuff is still true in terms of building relationships with brands and distributors. It's just
Mhm.
applied differently, right? um and what's so interesting about this is like, if you do this right, the amount of access you get to deals, to exclusive things, like exclusive discounts, like it's so much easier for a brand to want to give you more discounts if you have that relationship and you've built that rapport.
Mhm.
And I really wanted to clarify my thinking on that. And that's what I did in this week's blog post. If you just go to
Yes.
goor.com/blog, it's the first one there. Um, yeah, this guy right here. But yeah, I think it's a good read. I was kind of excited to write it because I feel like this is an area that doesn't get talked about enough. I think what ends up happening, in my opinion, is, and this is what I tried to avoid when we did the Wholesale Made Easy cast, is I wanted to focus on the underlying foundational things, not just the tactical things, right? Like analyzing products, yeah, that's important, but that's not what makes or breaks you here. It's
Yep.
again important, but if you don't understand how to approach brands and distributors, how to build the relationships, how to get exclusive access and things of that nature, you end up struggling. And you're like, why is everybody else crushing wholesale and I'm struggling with it? Most likely you're focusing too much of your effort and attention on the tactical things, not the strategic, long-term kind of evergreen foundational things.
Mhm.
So just want to kind of start us off with that. Again, this is live office hour. So if you have any questions, definitely throw them into chat. We're going to talk about all kinds of things, whatever you guys have. So, feedback on Aura, what's happening for your Q4 strategy planning. Hopefully you're doing that. We were just talking before we hit record here about how that's so important. And we keep harping on it, but we keep harping on it because it's so important. And every day that we progress in this year, you're just another day closer to that. And eventually what happens is there's nothing you can do, right? If you haven't placed your orders, especially on the wholesale front, early enough, you're just not going to get access to inventory, and it's just a null point. And so there does, and it's different for every single brand in terms of kind of when their cutoff is for when they can ship inventory in during Q4, if not before. But these are things that you need to be thinking about really heavily right now.
Mhm. Yeah, going back to the relationship piece, I mean, like so many businesses and industries are so built upon those relationships. And I mean, ourselves here at Aura, we give folks kind of a peek behind the curtain, so to speak, to our best users that are easy to work with. They all have good results. They give us actionable feedback. So it's going to be the same thing with distributors or brands in general. If you are easy to work with, they're going to be like, hey, you're going to get the first look at this, or we're only giving this out to a limited number of folks, whether it's a new product, more
Yeah.
inventory, expedited shipping, stuff like that. And then, yeah, Q4 planning. I mean, we talk about it a lot, but a lot of folks see about 70 to 90% of their revenue in Q4. So it makes sense to be kind of focused on that time. And you don't want to be playing the catch up game, especially it'll get to a point where you can't catch up. Uh,
Yeah.
Distributors won't be able to provide you with the inventory you need and things of that nature. So you always want to make sure you're ahead of the ball there.
Yeah. And I know last week we talked about how I think it was either that evening or the day after Amazon was doing their earnings report.
Mhm.
Finally got access. I didn't listen in. I don't like earning report calls; they're very lengthy. Um, but second quarter earnings, Amazon reported a profitable second quarter with 148 billion in sales just in Q2, up 10% from the previous year and a profit of 13.5 billion. However, the company's guidance for the third quarter was weaker than expected, leading to a drop in stock prices. Um, Kind of interesting. I mean, that just that shows you. Now, granted, this is all of Amazon. This is not just Amazon.com, right? This includes AWS, like Amazon Web Services, their tech, everything. But it does kind of show you, I mean, AWS is, I think, larger than Amazon.com in terms of revenue. Somebody can check me on that, but it is massive. It's crazy how much Amazon has. I mean, listen, we host on AWS, we build software for Amazon.com, and I certainly purchase things from Amazon.com. So my entire life is Amazon related in some way, shape, or form.
Yeah. Yeah, and one thing I always keep track of, especially if like the platform's loading slowly or things like that, it's always kind of does go back to Amazon Web Services. Downdetector.com is kind of like my source of truth, and it's amazing. You can see all these other major companies that have similar charts in terms of their outages, so you know that they're also using Amazon Web Services. And then just the movie/TV show side of me is always curious what portion of that revenue is tied to Prime Video or their streaming service. It's always interesting to kind of see that breakdown. But yeah, I mean, big Q2. Maybe they're projecting a slower Q3 because of that, but we always know Q4 is going to be huge. So will be interesting to kind of see how the rest of the year plays out.
Yeah, and they did mention a big layoff across a lot of different worlds. So AWS, Prime Video, MGM Studios. Looks like they're starting to streamline things a little bit more for profitability. And I've mentioned this before. I heard rumor that Amazon is potentially going to unionize. Personally, I'm not a big fan of unions. It feels anti-capitalist to me. But my theory here is that what's going to happen is they're going to lean more and more into automation and robotics, especially in the fulfillment centers. That's going to lead to more and more layoffs, in my opinion. Even on the driving side, so the full logistics side, I don't know. It's been years, but I think Amazon put down a deposit pre-ordered the Tesla semi truck. They're not shipping that yet, so we got plenty of times. But I think what could happen, like let's play this out a little bit in the future here. Amazon, and they actually spun out the LTL side of things, right? So even like cross stuff, they're not doing that themselves necessarily as much anymore. What is interesting is if they do go this fully autonomous route, that should, in theory, lower the inbound FBA fees, right? So my hope here is that from a seller perspective, fees start to lower because the cost of operations also begin to lower. Like even your FBA storage fees could go down in some fashion, right? If you're not needing as many hands to touch that inventory, so to speak, then it's cheaper to manage it. So I'm hoping, 5-10 years down the line, fees become something that will plateau rather than something that continuously increases. We'll see. That's a pie in the sky, me being, non-objectively, positive or optimistic, but who knows?
Yeah. Yeah. I mean, we've always seen them kind of implement random fees here and there, or what seem to be random fees. So maybe inbound FBA fees will drop off. They'll introduce something new, but hopefully it's a positive change for sellers if there's less human interaction involved in that sense, and just the lower cost for Amazon to provide that portion of the business.
Yeah, and I didn't realize this, but Dylan mentions Amazon is one of the biggest investors in Rivian. They're definitely thinking ahead in terms of transit too. Yeah, I think so. And I think UPS will do this. UPS is unionized, so I think it's going to be much harder for them to implement these kind of things. But yeah, I think that you have a lot of these larger logistics companies that are placing larger bets for the next decade plus. And nobody really knows how it's going to play out, right? Like in theory, Tesla's, I hate to call it theorized because I know they're working on it, but the auto taxi, right? The autonomous taxi, like the vehicle's built solely for that use case. In theory, your Ubers should go from $18 to $5, right? Because there's no human there that they have to pay for. It's electric. Like a lot of the cost economics change within that model. But at the same time, I've seen people in SF where they're using the Waymo, and it's actually not much cheaper and sometimes could be more expensive. Now, how much of that is due to lack of supply versus some other variable? I don't know. I would imagine that most of the cost there is lack of supply and just too much demand, because they're only able to roll it out to a certain number of people and all these different things. But yeah, I think a lot of that's going to change. And Figure is a company I've been following in the robotics side of the world for the past few years. Awesome founder. Brett Adcock is his name. I think he's like a second or third time founder, like super incredible guy. They just announced their Model 2 of their humanoid robot, and it is like really, really impressive. Even like the parts, like the legs and stuff, easily detach and it can be replaced. So like cost of maintenance should be much lower than what they would have been. And they're already working in BMW factories. Granted, in very small use cases for testing purposes, but they're in actual warehouses, or factories, should I say. So you can imagine there's only so much you can automate using basic automation techniques and things like that. When you do need to have actual like, hands-on kind of things, either you build the machinery to do that, which is very time consuming to build, design, and it can break and all these different things, and typically have to be overfit for certain use cases. Like and I looked into this when I was a seller because I wanted to have a fully autonomous warehouse myself. There are systems you can buy that will basically scan the dimensions of a box. It has a roll of boxes, like, let's say it's going to scan the dimensions of the product. It's going to then pre-slice a box to fit it really well and go through that whole process autonomously. It's really cool. It's not super fast. And they're incredibly expensive. You're talking like $100,000 plus. So not really effective for an average use case. Whereas a autonomous, humanoid robot, so to speak, might cost $60,000, but it can do far more things, assuming it can be trained. Right. And that opens up a lot where now the way you're viewing the cost is very different because of the value it could provide. And these are assets that can be, depreciated in theory. I don't think we've gotten to that point financially in that market where people are actually buying these and trying to depreciate them in a way that makes sense. But yeah, I could imagine that companies like Amazon are thinking very heavily about this world and thinking about how everything in their logistics warehousing world will change. And I think they're going to lead that because that's kind of who they are, right? Like fundamentally, they're a tech company and they're going to view things from that perspective. So what does that mean for Amazon sellers? Again, my hope is lower fees, more throughput. Like it sucks when it takes 3 weeks for something to get checked in. But if you break down the pathway from when it gets checked into it's live and you break down every hand that touches that, it's quite a bit. So if you could streamline that whole approach, cost should go down, speed should go up, efficiency is very nice. I don't know, that's kind of interesting. And then you get to a point where maybe because you have more predictable throughput and data, could you now forecast your inventory placements and orders more accurately? That gets kind of interesting too.
Mm-hmm. Yeah, and I think we were talking about it either a few weeks ago or maybe a couple months ago now that I don't know if they had started to test it or they were getting to the point where they were going to test it where they had warehouses where they were almost fully automated and were running with the lights off sort of thing.
Yeah.
So yeah, really interesting concept. I mean, even saving money on the electric bill in that case, but yeah, it'll be interesting to see how they kind of continue to push the envelope and lead the way in that sense. And it'll be interesting to see what works well, what doesn't, and how that kind of trickles down to the sellers' different fee structures, things that we've talked about.
Yeah, I'm glad you brought that up. I was at a racetrack and they were telling me that they don't like doing night races because it costs $1,500 to turn on the lights. Yep. And I'm like, how is that possible? But then, I mean, we're not talking like a massive racetrack here, right? And so imagine one warehouse and then imagine 1,000 plus of those and imagine being able to turn the lights out. You're right. Like that's interesting. Granted, you're going to have to still pay for the energy, the electric for robots, but at least they're more so making money when they're working versus just the lights are on. You're right. It's a very passive thing. So yeah. It's a cool topic. It's a topic that gets me pretty excited because it really kind of takes the human out of the loop in a way that you become more of like the orchestrator. This is what's being talked about a lot in the large language model kind of world, in the concept of AI employees, which is like, what if you're not the one doing the work anymore? Instead, you're the one orchestrating the work. And you're deciding on what's the spec here, what's the PRD, what are the details in the context, kind of working on like a Google Doc, right? Like the Google Doc is your work. Like you're dictating what and how, and it's going to go and do those things for you and come back and ask for feedback and all these different things. So I think we'll see that in a much larger scale with logistics. Like imagine running a long distance logistics, like shipping company. Like, and I have a few friends who have done that, where they have like 3 semi trucks and drivers and stuff. And there's companies like, I think it's Central Dispatch or Dispatch Central. There's a few different ones. But basically like that's where people post requests for transportation, and you go and you bid, you get it, you pick it up, and blah, blah, blah. There's all the, administrative stuff inside there. What if you could hook up to that API, have an algorithm that could bid on the best ones, and then ship the data to the autonomous semi truck, and it just automatically goes and does its thing, and you're just controlling it as it's going. There's a company I follow, or I just found on Twitter, I'm not going to say I follow them, but they are basically applying AI to that dispatch kind of system, where it's like, cool, like you give us your requirements for what you like, and instead of hiring somebody to sit there and bid and do all these different things, we'll just auto bid and handle everything for you. We understand the limitations you have, all these different things, and basically we'll just deliver you jobs that make sense for you and your business. So like already we're seeing AI be, applied in these little use cases that are time consuming and require human effort right now.
Yeah. Interesting. Huh?
Yeah. See, Dylan, is there any way to avoid getting listings deactivated for high price when using Maven? Yes. So that sometimes can be the case. And I love this question. The best way to do it, Aura's not able to know when it's going to happen. We do our best guesstimate. Like if Amazon's including the competitive price, like from other platforms, we'll factor that into the Automax. We don't always get that, which is really frustrating. So the hack here, not really hack, but the solution here is, if that is occurring on certain listings, go see the last price you were at before it was deactivated, and then add that as a manual max price. So you're actually going to override. So you're basically going to say, hey, Maven, you're not doing a great job on this one. It's a little weird. I'm going to override it because I know the data. I'm going to do that. And then you reactivate the listing. There's no way for us, which is kind of interesting, for us to auto re-enable listings when they become deactivated. I'm surprised that's not a functionality in the API where we could just be like, oh, cool, it got deactivated at this price. We'll just adjust our Automax calculation to that, and then we'll reactivate it and just go back to normal. That sounds amazing. We can't do that via the API, which is so interesting.
Yeah. And one other thought there, Dylan, as well. Our Dylan is correct with what he said, where if it's getting deactivated due to their fair price policy, it'll list that out. But if there's a high pricing, I forget what it's called, violation or warning or things like that, you may have a min or max set in Seller Central. Those mins and maxes in Seller Central are really just safeguards to kind of ensure that you never sell below or above that threshold. You'll want to make sure that those mins and maxes are set wider than what is set in Aura. If you're using the auto max function, what I would recommend is making sure that min price is a little bit lower than the min price in Aura, and then just deleting your max price. So that kind of gives Maven the full runway to test that higher price point. And with Maven focused on profit margin and sales velocity, it does tend to lean towards the profit margin side of its logic. So it will test those higher price points first and then work its way down. So that may also be the other reason for those deactivations there.
Yeah. And one thing too, like I never recommend you to set mins and maxes in Seller Central. So moving forward, don't do that. Sometimes they allow you to delete them. Awesome. If you can, please do that. If they are not allowing you to delete them, do exactly what Casey's saying. Just make them wider as bounds than what is set in Aura, because they don't communicate, right? Like we're not actually syncing your mins and maxes with Seller Central, because again, that just creates so many issues. Instead, what I recommend is, if a variable is not being used in a healthy way, like a min and a max in Seller Central, it only causes problems, right? The only functionality, by the way, of a min and a max in Seller Central is to deactivate it if it goes outside those bounds. But you're not really using them in that way. And they're very manual, right? Versus if you're setting those in your repricing tool, which is like auto calculating things and doing exactly what you want, that makes sense to have there. So really your mins and maxes, that source of truth should be inside of Aura, not inside of Seller Central. That's going to help alleviate a lot of issues if you're dealing with those.
Yeah, it looks like Peter might have run into the same issue there. So yeah, definitely want to make sure those mins and maxes are removed. Essentially, Aura is blind to any mins and maxes set in any other platform, and vice versa. Seller Central, or if you're using a tool like Inventory Lab, things of that nature, those mins and maxes are going to be blind both ways. So with Aura being the main tool issuing price updates, managing the price of your inventory, you'll want to focus on those mins and maxes set within Aura, and then just ensure that they're either not set or wider than those figures set in Aura in Seller Central there.
Yeah. See, Luke, if I reprice and reactivate manually from within Seller Central, will Maven learn the new max on its own. Not in the way you're thinking about it here. It's not built to do it that way. Because again, we instead of like trying to solve that problem, our philosophy is let's avoid the problem to begin with. So it's not going to just know that it was deactivated and then reactivated, because Aura can't really see the reason why it's deactivated. Deactivations could happen for a number of reasons. Now we logically know that it's probably this, but I can't just assume that necessarily. So it's just not a good practice to assume that's the case and then factor it in, because that again could change. But great question there. See, Dylan, typically when it occurs for me, it is when my items are in shipment and are reserved and the price shoots up, then it deactivates the listing before my inventory even checks in, and I don't get sales on new items unless I reactivate and go set max price in Aura. Yeah, so basically what's happening is whenever you're out of stock, typically even when you're shipping and you're technically out of stock, we're going to try to raise that price up so that when you come in active, you're coming in at the highest possible price. That way, because what we've seen in the data is if you set like a default listing price, let's say at the current buy box, and let's just call it $20 when you listed it, but by the time it gets checked in, the buy box could be at 25. The moment you went live at 20, you pulled the buy box down and like you actually gave up that margin. So we intentionally will raise that up. So yeah, again, if you're noticing that, you can actually manually set the maxes. You can tell Maven to not auto set your maxes. Don't really recommend that, because again, it's going to work on average. You're just always going to have exceptions. There's always listings that act a little weird. That's when you're going to want to manually override those. Awesome. Great questions. I like this one. This potential high pricing errors are the bane of my existence. I wish, I think we do a pretty great job, especially seeing the data from when we had the alpha of Maven. I mean, we were hitting potential high pricing errors quite a bit in our testing. And then we kind of found a sweet spot where we're able to like maximize profit, but we're still going to hit a few of those every now and then, because again, there's always exceptions. And what's interesting is even in Amazon's data, which is what we use to run that calculation, there are variables that are only there 20% of the time. So when they're there, it's super easy, but 80% of the time they're not included, but they're still there, if that makes sense, right? Like Amazon's could still deactivate you at 50, but they're not going to let us know via the API, hey, 50 is like a hard stop on the upper end, which is kind of weird, but welcome to Amazon things. Let's see, Luke, that's one of my favorite features of Maven, raising the price when out of stock. I see too many new sellers chasing buy box with 3-week lead times and therefore tanking the price. 1,000%. We've seen it ourselves. When we started having deep conversations with users, are like, hey, what's your workflow? How are you doing this? So they're like, oh, well, I'm setting it at the current buy box value. But then we look at the data, it's like, that actually doesn't work the way you think it's going to work. It's actually more often than not going to pull the price down. And it's actually, you're just giving up margin for no upside,
Mm-hmm. And one thing to note there as well, Luke, that is also a feature on our rules-based strategies, not just Maven. If you are using any rules-based strategies on your listings under the pursuit section of that strategy, the very last setting all the way at the bottom is going to be what to do when you're out of stock. You can set that to use max price, and it'll have the same functionality as Maven, moving that price up when you don't have fulfillable units. There are a couple other options there, but like Dylan said, we usually recommend using that max price when you're out of stock. So when you come in stock, you start at the top of that scale, if you will, and work your way down. But also a feature on the rule space there.
Yeah. Let's see, Peter, what are some of the best ways to source? Could you clarify specifically what business model? Because very different from RA, OA, and wholesale. But happy to kind of share what I can there. Let's see, coming from books, got my Aura up and running right before Prime Day. Since then, I'm up 81% in the last 30 days. That's insane. I love that. That's fantastic. But Peter, follow up in the comment section with like specifically what model, because it is very different. Oh, awesome. Thank you. I think that's automatic. I think I do have it set that way. I do use Maven unless I'm trying to liquidate. That's perfect. Yeah. By default, Maven's going to do what Casey's talking about here. So as long as you didn't go into the advanced section and uncheck anything, you should be good to go.
Yeah.
That's the cool thing about Maven. It's like, yeah, go ahead, Casey.
Yeah, I was just going to say you are correct, Luke. The default setting, even in the rules base, is to still raise to your max if you do out of stock. So if you didn't tweak that, you should be all set there as well.
Yeah. Yeah, we try to build things, even the rule-based strategies, so that by default, it's in a good position so that if you happen to forget something or overlook it, it's still like kind of in the best default space. We got this philosophy from the book Nudge. Great book, by the way, on behaviors. One of the cases it gives is like, if given two options, and the example they give here is investing in your 401k, right? Let's assume your company has a match of 10%, just as an example. Is it objectively better for you to do that than not do that? Yes. So what they found, though, is the friction was too high to get people to opt in. So like, all right, people are not getting what they need. So they flipped it. They said, okay, by default, we're automatically going to enroll you into this up to the full match, because objectively that's better. However, you can always just say, no, I don't want to do that. So the action is or the friction on the end user is to say, I don't want to do something versus I do want to do something. And what's interesting is objectively that works out better. And so you can apply this to software and say, okay, well, if we, instead of just giving you a massive blank slate, the defaults are best set so that even if you do fumble around and mess things up, you're not going to mess it up that bad. And so that's one of the things we've done with I remember I read that book and I was like, wait, we need to completely change the defaults in the strategy builder. This was years ago. And we went and we changed it. It was like, all right, what's the best optimal like default starting? And then you can change it to whatever you want. But even if you just created it and let it go, it's at least in a good enough situation, a good enough setting to where it's not going to hurt you. So,
yeah, folks are always trying to ask, what's the best way to set up the buy box strategy? And I'll send over typically our help article around the buy box strategy. And they're like, what settings do you recommend? And it's always the settings that are laid out when you just go to build the buy box strategy are actually what we recommend. So there's not too much thinking involved. Obviously, if you have certain listings, you want to behave in a certain way, you can adjust. But all of our default strategies are somewhat preset to based on our best practices, best recommendations. The only exception might be that min-max price section. You always want to make sure that's set up for your business specifically.
Yeah. And Luke hits it right on the head, right? It's your job to nudge us sellers, not just the prices. 1,000%. This is why when we set up the company, we're like, well, how are we going to be different outside of just product, right? Well, we said, well, customer success has to be the first thing, right? Because if you have this super advanced tool, but you can't get any help and figure out how to use it, then it's kind of irrelevant. And so we said, well, what if we could, build out that area of the business so fundamentally different than what we've experienced? Could we then be able to say, hey, here's what you should be doing, or here's how to think about X, or here's a counterintuitive thing, but we've seen it work time and time again. Trust us on that and you'll be fine. We try to nudge in a lot of different areas. So that's great. See, Peter, transitioning from books, I've been playing around with Amazon to Amazon, but very open to expand and change in any direction to source. So I think I'm going to give a very broad thing here. So, I've said this time and time again, it's hard for me to give really good advice without understanding the full context of each individual, like time, capital, things of that nature. But I'll attempt here. I think, and I haven't personally done A to A. I know Saul really well, like literally the grandfather of A to A, in my opinion. Great guy. I think A to A is really, really good. I think from what I've seen, it's amazing. I don't think many sellers are doing solely A to A. I think there's a supply problem there where you can't really scale crazy far. I think you still do incredibly well. So what I think makes a lot more sense is you maximize your A to A as much as you can, but you're still spending a lot of time doing online arbitrage sourcing. Flip Alert, actually by Sol, from what I've seen, has been phenomenal for people. I've seen a lot of big sellers jump onto that, and it's been really good for them. I would heavily go through Chris Grant's OA challenge. He breaks down how to think about sourcing, how to read Keepa charts. There's a ton of information in there. I forget how often he runs that challenge, but it is well worth the effort. Heavily recommend it. That's what I would recommend. Honestly, like if I was starting back as a brand new seller today, I would spend a lot of my time doing OA and A to A. I would probably spend like 1 to 2 days a week on straight A to A, and then the rest of it on online arbitrage and trying to get replenishable things. Wholesale's fantastic, but a longer term thing, right? Like, and again, this is why it's hard for me to give good advice, because I think wholesale is fantastic, but it takes a lot more upfront work. And if you need the capital now, wholesale's not the thing that's going to, you're going to be getting products left and right. It's going to take a little bit more time. So if you need the cash flow, maybe the OA A to A makes a little bit more sense in the short term. And then slowly you could transition over to wholesale. That's one way to think about it. But yeah, in terms of like kind of ROI and like best bang for your buck, I've always said this, like every business model in the Amazon space, there's always a 7 or an 8 figure seller. Like one of our top 5 Aura users is straight online arbitrage. And I've heard people be like, you can't scale OA past this dollar amount. And I'm like, they're doing 8 times that dollar amount, like consistently. So and I've said this before too, I think it comes down to your skill set and what works really well for you. If you understand sales and you're good at that skill, wholesale is probably going to be super easy for you. If you really struggle with that aspect of things, but you're really good at analytics, like you're really analytical and you like data and stuff like that, then OA and A to A is probably going to be the best bang for your buck, right? So it's hard to say like which thing you should do. I think ultimately you should sit down with the list of potential models at your disposal, think through your strengths, do like SWOT analysis, right? So strengths, weaknesses, opportunities, and I forget what T stands for, but you do that and really understand, okay, well, which one fits me the best at face value, and then go commit a year to that. Because it's going to take you time, no matter which one you're picking, right? Either way, you're building a business. Either way, it's new skills you have to learn in some way, shape, or form, and you need to be able to commit enough time to developing those and getting good at it. But that's generally kind of my advice on that topic.
Prince has been doing some good research for us. You can actually skip to the second message. I can kind of catch us up. Essentially, if you're having high price errors, you can go to manage all inventory and then filter by the inactive status. The ones at the top will be those that have high pricing errors, and that essentially catches us up to this message here.
Nice. So you'll see that see that where it says your price, there is a red arrow. You cannot click to save. If you tried to, we'll just kick you back to the red error. Yeah, it's fun. Thanks, Seller Central. See, here's where you can try entering different prices. Once you click out of the box, wait a second. The system will either leave the red error or the red error will disappear. If the red error does not disappear, you just keep lowering the price until it does. Once it does disappear, that's your max price. You can manually enter into Aura. No more guessing and waiting and repeating. Love that.
Yeah, Prince. I think we were chatting throughout this. Yeah, I was going to say, I think Prince and I have been having a couple conversations the last few days, doing some interesting testing with Maven. But that's definitely a good kind of hack, quick way to break through the noise and find what that actual max price is, Prince. So thanks for doing that legwork for us there.
Yeah, and I want to highlight this, right? Because like, what software companies in the Amazon space are like experimenting with their users on like finding unique like use cases and like like literally chatting about like, hey, like what about this? And oh, hey, by the way, I found this, like you guys should know about that. Like, oh, it's great, man. It's great. This is why I say like we don't have a customer support team. We have a customer success team. Like support people just answer questions. It's like, no, we do way more than that. So it's awesome.
Yeah, thanks for that, Prince. I just took a screenshot of that response so I can hopefully help people find those max prices in the future there.
That's wonderful. Luke, so ditto on Flip Alert. I'm dabbling in A to A and spent $12K in 2 months just with Flip Alert. That's pretty impressive. not going to lie. I got to kind of preview Flip Alert before it went live during the beta, and I was very impressed with what Saul's building. Saul's an incredible founder. Let's see, Peter. Yeah, I've been through Saul's, Chris, and Corey's challenges in the last 6 months, and it's definitely all good things. But I think that a good point that you said, what you're better at. I'm much better with people than so I have to figure out the best way to leverage those people skills. Perfect. This is the level of self-awareness that I think more sellers should get into. I do really well with people. And I've said this time and time again, when I tried OA, I was horrible at it. And I've gotten better over the years, but I'm not the best like data analyst kind of person. Like I can be analytical, but it is so much easier for me to just jump on and have a conversation for whatever reason, which is ironic because I'm not that much of a social butterfly. Casey and I were just chatting about that before we clicked record. Like I can do this kind of stuff and it's fine, but I'm not really that outgoing. But for some reason, I can just have a conversation on the phone and it's super easy for me. So it is kind of interesting that I did better with wholesale than I did with OA, but there are people who the inverse is true. And so really understanding, again, your strengths, play to those. Like don't go on hard mode if you don't have to, right? Everything's hard no matter what. But if you could find something that, you just have a little bit more amplitude because of your strengths, why not lean into that, and that's the cool thing about wholesale is like, you got to be analytical enough, of course, to look for red flags and things of that nature, but it's just nowhere near the level of analytical kind of work that OA is. So yeah, that's good. So I think, probably spend more time in Corey's stuff than Chris's stuff, just given Corey's real focus on wholesale. And that's probably going to do a little bit better for you. Let's see, Peter, what about wholesale do you think you excelled at because you can talk to people? I was good at understanding the other person's perspective and handling objections. So I was a personal trainer for a number of years, and most of being a personal trainer, the skill set of being a personal trainer is not the training, it's actually sales. If you work in a larger gym. So most of my time was spent doing sales, handling objections. Like I'm sitting down with a 50-year-old woman and trying to get her to sign a $6,000 due today contract. Like you have to understand the dynamics of the conversation. So what I think I excelled at was first understanding the emotional status of the person I'm cold calling. Like if I called somebody and I can tell they're having a rough day, I just know that my probability of getting a good conversation out of that is very low. So I had to do a pattern interrupt. So I had a few tricks up my sleeve. I would drop my phone on the floor so that it could visually be heard. And I would fake like I just dropped my coffee or fell down a flight of stairs. And I would start busting out laughing at myself. And all I'm doing is I'm trying to give that person permission to laugh with me. Because if somebody's laughing, you kind of want to participate. There's a mirroring aspect. So if I could get that person to shift their emotional state, now they're a little bit more open. Now we can have a real conversation. So I was good at doing that kind of thing, understanding who I'm talking to and what's their current state. I knew that if I'm talking to a founder, the conversation is very different than if I'm talking to a salesperson, because the salesperson is thinking some kind of percentage of whatever number I throw out. Whereas a founder is not really thinking that way. They're thinking about building the brand. How's the company equity going to look like? So like I would change my conversation depending on who I'm calling and their emotional state at the time. And honestly, like it's just easy to talk to people in a lot of cases, most of the time, especially in sales. And like Casey, you can speak to this way better than I can, but like a lot of times you're not word vomiting. You know what I mean? You're asking questions. You're actually in sales. You want to talk a lot less than you think you should. And so I would, I did something, I just call it, shifting the power dynamic. Whenever you call, there's always, if two people are on the phone, one person has control, one person has the power. If you can shift that perspective, it changes the dynamics of the conversation. So if I call them and I'm basically begging them for an account, they have the power seat. But if I shifted the perspective to be like, I'm looking for this, I just want to see if you guys would be a good fit for us. Like all of a sudden I'm pulling the power dynamic over to me. And now I'm asking them questions, and I'm more so qualifying them than they are qualifying me. But what's interesting is by me taking that approach, I'm qualifying myself. So it was a different dynamic. I used to joke that I think I'm sociopathic because I could just like break down a conversation like that pretty easily. It's been a hot minute, but when I do it a lot, I can get really good at it. So for me, that's kind of, I think, what I excelled at. But yeah, just you realize it's just a conversation that has dynamics. And if you understand the dynamics and you can work inside those dynamics and shift them however you see fit, those conversations are relatively easy to do. I used to say, like, I had a 40% open rate. So if I called 10 brands, I would open 4 accounts, and one of those accounts would have at least one profitable SKU in it. So then I just knew, okay, cool. Well, if I want to add at least one profitable account per week, how many do I need to call? And the reason why I said a 10 call goal per day is I wanted to open and add one new SKU per day so I could scale really fast. Now I could have just done 10 per week and technically hit one new SKU per week, but that just wasn't fast enough. And you want to have more profitable items than you can afford to buy, because what you end up doing whenever you're capital constrained, you have to trade. And I would do this. I would go into Inventory Lab and I would sort based on ROI, and I would look at the lowest and say, okay, cool. I just added something at 15% ROI. I don't have the capital for it, but my lowest thing right now is 10% ROI. So I'm not going to replan that. I'm going to swap that 10% for this 15%. I'm going to keep trading up. And so one of the KPIs I used to look at was my average ROI per SKU, because eventually I can keep growing my revenue. But when every time like a dollar came to me, I was respending it, right? And I wasn't pulling in a bunch of capital and things like that. So I said, well, what if I instead made my capital more efficient? In other words, I made the ROI higher on average. And so that helped me make certain decisions where there were things that were profitable that I intentionally didn't buy because the opportunity cost was too high, because I could have bought something else with that same capital at a 2x ROI. And so I'll just trade those things out. But what's cool is you still have that account, right? So now that I'm building more of that, the ROI, the dollars come back to me, I can now afford to jump back into that 15 because I have, available capital. And so I never had a point where I had capital I couldn't spend. And I kept opening accounts. And eventually I had to slow down because I got really good at that, and it started to outpace how fast I could replan my capital. But that's a good problem to have, right? And I've said this before, you either have a sourcing problem or a capital problem. Most sellers, when they get started, have a sourcing problem, not necessarily a capital problem. Even if you only have like $1,000, you still have capital technically. Eventually what happens is you get really good at sourcing, and now sourcing is not the limitation. It's the capital that's the limitation. And now you're faced with a decision. Do you raise capital, take on more debt like credit cards and things of that nature? Or do you become more efficient in your operations? Are you taking net terms? Are you hacking the average ROI and trading the way I just explained? There's a lot of things there to make things more efficient. And there's no right or wrong answer. A lot of people raise money, and there's nothing wrong with that. I could have raised 30, 50 grand and spent it in 20 days, just not what I wanted to do, at that time. So I intentionally didn't grow super fast. I grew as fast as my capital allowed me, basically.
Yeah. Yeah, I'm thankful to no longer be in the sales world, but I'm thankful for my time in the sales world because of
that's every salesperson
that it teaches you. Yeah,
You're like, I could do it and I'm good, but I hate it.
Yeah, some people have the endurance to stay on the hamster wheel, but I kind of burnt out after, I think it was 4.5, 5 years in tech sales. But so many of those skills translate into just so many different areas of business, specifically objection handling. I mean, it usually boils down to a lack of trust, a lack of knowledge, or a lack of capital cost. And I would get to a point where you can just call those out directly. People are like, hey, I need more time to think about it. It's like, hey, I typically, when people say that, they don't need more time, they need more information, and I'm your best source of information. So what else can I provide you right now on the phone? And then, I definitely agree with changing like the chemistry of the conversation. At one of my past roles, I had the lovely role of having to call people and letting them know that their plan was changing and they would have to pay us hundreds of dollars more per month, which was always very interesting. There's a couple ways they're like, you know what, I'm not going to use you guys. And you say, you know what, you're right. Doesn't sound like we're a great fit for you. And then they start to come up with all these excuses about why you are a great fit. And then have people, screaming at me on the other end of the phone, and you go, "Hey, I'm happy to have this conversation with you, but if it's not in a professional manner, I'm going to end the call right now." And then they kind of
Yeah.
realize that they've been acting a little crazy and kind of come back down to
Gotcha.
earth a little bit. So, yeah, there's a lot of kind of gut checks and reality checks you can have with just a couple well-worded questions to kind of recenter the conversation and get what you're looking for.
Mm-hmm. And some conversations are just bad. There are times where I've just had somebody laugh in my face. I'm like, yeah, all right, whatever. I hang up and I laugh too, because I'm like, that was the weirdest conversation I've ever had, but move on. You know what I mean?
Yep.
Not every account do you need, you know what I mean?
Yep.
And this is the whole thing. Like, it's got to be a good fit for you first and foremost. Just because you can buy something from them doesn't mean that that's good for you. And that's why I started to shift the conversation and say, here's my criteria. Here's what I'm looking for. I want to see if you guys are a good fit for what I'm looking for. And all of a sudden they're like, okay, cool. What are you looking for? Now now I'm getting them to kind of sell me by me switching that dynamic. And it works really well. It's surprising at how well that works.
Mm-hmm. Yeah. You were talking a lot about like inputs, outputs. If you made 10 calls, you'd get 4 accounts. That's an exercise I would recommend a lot of people to kind of go through, figuring out your inputs and outputs, specifically starting in sales. I knew if I had to get 10 connects a day, I needed to make 12 calls to get 1 connect, 120 calls a day. And you kind of just boil everything down from those larger numbers, but definitely a super helpful exercise to make sure that you're spending your time wisely, but also allocating your time appropriately to different tasks that are going to take more or less time depending on your bandwidth.
Yeah. And you want to know what you're good at too, right? Like I tracked how many did I call? How many conversations did I have? How many accounts did I open? And how many had at least one profitable SKU I wanted to test by? So these are my conversion rates. And then I can look at my pipeline, so to speak, and be like, all right, where do I need to get better at? Because if I'm calling a bunch, but not having a lot of conversations, maybe there's something there I need to re-engineer or relook at. Or is it I'm opening up a ton of accounts, but hardly getting anything profitable? Maybe I'm targeting the wrong kinds of distributors or brands. And that's kind of how, it kind of, you look at the model of it, and then it lets you know where to focus your talents or what skills do you need to go build, right? If you're calling a lot and having a lot of great conversations, but you're only opening 1 account out of 20, you probably need to get a little bit better at the sales skill set and understanding how to do that. That helps so much, because a lot of people are like, oh man, I'm hitting the phones and blah, 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 but it's not working. I'm like, well, what part of it's not working? Like, we need to go a little deeper into that and really understand it.
Yeah.
See, ATIF, very specific request. I think Aura should have a profit sales metric tracking, but very accurate, so you can reprice and drop a software like SB. Just a thought. Love that. I'm not going to say anything. You'll be very happy in a few months. That's all I can say right now. So I also agree with you, ATIF. I think that will be a fantastic feature request. And we are very, very open to hearing that one. Let's see, Peter, how does that skill translate to getting sales on Amazon? So, I've always said this too, you make money on the buy, not on the sale, right? So if you still have to analyze your products, right? And make sure you're making good, profitable buying decisions. However, I think it's a little bit easier to do with wholesale than with something like A2A or OA, in my opinion. Some people are like, dude, A2A is the easiest thing in the world. You're an idiot. Probably true. So you still have to be able to analyze products, look at the Keep It chart, understand seasonality, competitors, all that good stuff. But my criteria was pretty simple. And if I hit that criteria on it, I was good to run a test. So I wanted at least 30% minimum ROI. I wanted a gross margin of at least $4. So I wanted both of these because the dollar specifically allowed me enough room to begin testing running PPC ads to it, because PPC ads weren't super expensive. If I can spend 50 cents and make, $3.50 back, I was okay with that. Amazon wasn't on the listing, and I can move at least 30 units per month myself, given the current competitors. So what I would do is I would jump on Jungle Scout, do the sales estimator for units, and then divide that by the number of competitors actively competing. Not every seller on a listing, because if some people are at 50, if 2 sellers are at 50, but 8 are, actually competing at 32, I'm really competing with 8, not 10. So that's what I would do. And if I'm hitting all this criteria, I'm going to run a test order of 25, 50 units. And if by the time it gets checked in and they start selling and everything's actually looking good, that's when I triple down. So you still want to bake in safeguards, right? You don't want to just look at data and be like, oh, it looks great, massive order. You could something. And this is a super important thing. You should look for reasons not to buy inventory, not for reasons to buy inventory. This is the whole concept of inverting things. Because if you're looking for reasons not to buy it and you can't find any, well, that's a good sign. But if you're looking for reasons to buy something, you're going to be highly biased, which does not work in your favor. So you want to build this kind of checklist for yourself. We wrote a blog post on checklists and why they're so important. They don't have to be super complicated, right? My buying criteria was pretty simple. Now, do people compete with Amazon and crush it? Yes. I had a bunch of issues with Amazon competing on listings. And I said, I'm just going to rule that out. There's too much opportunity here. And if I just remove that variable, I don't have any of those problems. And there's still plenty of things for me to purchase. So that was a decision that I made that worked for me. Let's see, Ian, what do you do if the product does not work out or the price tanks? Do you use the liquidation feature from Amazon or do you just lower the price and sell at a loss? It depends. So a lot of times, especially on the wholesale front, you're looking at the average 90, 180 day buy box price. I'm not looking at the current. I learned this lesson the hard way. What's the current buy box? Oh, that's super profitable. By the time it gets checked in, it's lowered. But then you look at the keep it chart, you're like, oh, it actually just went back to its average. So if you're profitable at the average price, you're going to be fine. You're going to be super profitable sometimes, less profitable other times, but on the whole, you're going to be fine. So again, you're looking for ways to negate and rule out things like price tanking and stuff like that. You can see it happen on the Keepa chart, right? Now, can you do that with OA? Not all the time. You can certainly find gold where that's not the case and it's relatively stable. Wholesale doesn't fluctuate the way that OA does. So you have far less of that. Now, can it fluctuate? Of course. Have I had to liquidate things? Absolutely. So what I do is if it is actually becoming a problem, like I jumped on a wholesale listing and 20 other sellers jumped on it because a distributor opened its doors and I had direct with the brand. Nothing we could do. I got to compete. So I'm going to move as much as I can because I need my capital back. And eventually, if I do need to liquidate, even take a loss to get my capital back, I'm willing to do that. Why? Because I have other profitable things I could spend it on. So you can't get too fixated on a specific listing or product. It's going to change. Now, I'm looking for things I can carry for years on end and not really have to worry about it. Can I always do that? Of course not. So if something does tank, great. I'll get my inventory out, replen something else or add a new product. But I'm still going to watch it, right? Because what ends up happening behaviorally is a bunch of sellers jump on something, price goes down, basic economics, everybody leaves. Great. I'm going to go back onto it because I still have the account, right? So everybody thinks it got tanked, and it did, but it only got tanked for a short period of time. Everybody left it, nobody replened, and I'm going to come back on it and be profitable. So you got to be a little strategic about it. But yeah, there are times where you will have to take a loss. That's just part of it. But the important part here is you will learn from those losses. You have to go back. If something goes bad on a listing, you need to go back and analyze and figure out what you missed. Could you have seen that going in and you just didn't? That's fine. Learn from that. Now write down on your checklist, look for this. And if I see that again, here's what that means. And I should avoid that. That's going to help a great deal. The feedback loop you need with yourself, whether it's OA, wholesale, RA, doesn't matter, is when something goes bad, reanalyze, understand why it went bad and how you could have avoided that, and that factor that into your process moving forward. So ideally, when things do go bad in a certain type of way, it only happens once or twice and never again because you learned from it and you adjusted your process. Great questions, though. This is a good session. I like this. I appreciate you asking that question too. See, having trouble with the app, getting an error. Support said I need to clear cache, but I don't know how to do that on Android, and I didn't know apps have caches like websites. So technically, Aura, if you use it on your mobile device, it's not technically a native mobile app. It's actually it is the browser. It's just, I'm gonna say, parading like a mobile app because that's the way it's designed. You can do that. So actually, if you go into, I forget exactly how to do this on Android, but if you go into the settings in the browser, you're probably using Chrome. Go into that settings, and then there should be like a history or cache or something along those lines, and you can clear that, and that should fix that problem for you.
Yeah, and I am chatting with them as well in our chat
Awesome.
feature, so trying to help troubleshoot them. They should be sorted shortly, hopefully. But yeah, we should be all set.
Yeah. See, ATIF, why does Aura default to trying to get buy box when the buy box is suppressed? So not always do you want to unsuppress a listing. If you have limited units and you're still getting sales, it's not the end of the world. By default, though, 81, 82% of organic sales happen in the buy box. So what happens when you remove the buy box? A lot changes, right? The demand is going to change because Amazon's not going to prioritize that in search results, things of that nature, because it's not the best experience for their customers. So what you want to do is you want to re-engage and reactivate the buy box so that the demand is able to get back to where it previously was. That's why we do that by default, because you're going to miss out on a ton of velocity. You might have really healthy profit margin, but you're missing out on the velocity side of things. And that becomes a massive issue. Again, if you have 5 units and you're still moving them fast enough at a super healthy profit margin, don't worry about it. You can uncheck that. But on the average, you actually want to reactivate those buy boxes to get that one-click sale, get those organics. Amazon's just going to deprioritize that listing as a whole in that product, and that becomes a massive problem in the long term. So if you're going deep on listings, you're going to want to auto unsuppress buy boxes. Awesome. We got a few more minutes here and then we'll wrap up for time. So keep those questions coming. Happy to dive deep into anything else you guys have. Appreciate everybody making the time. It's been a fantastic session too, going into some cool stuff. Let's see, Luke, on that note, what is Maven supposed to do when it can't reopen buy box within my min? It doesn't seem like it goes back into competitive mode. It seems to stay in low price mode. That's correct. Because it's going to attempt to reactivate that buy box. Now, just because you can't today doesn't mean you can't tomorrow. So it's going to continuously try to do that, assuming that you have that setting turned on, which by default it is. So if we cannot reactivate within your min max range, we're going to kind of play near that min range because things can change over time. Just because, I've seen it where what was the exact case here? We deactivated a buy box at 50. Yeah, that was considered too high at 50. We lowered it down to 48, reactivated it, raised it to 51 and still had it, which is weird, right? So like things can change. So today 50 might be too high. Tomorrow that too high could be 53. So we kind of have to stay within that minimum range to see if we can grab it and then pull it back up if we can. So there's no like strict policy for like how Maven handles that exact case because it's going to play with, there's so many different variables involved in that. But on the whole, it's basically going to try to stay closer to that min value to try and reactivate it as it can. I wish they didn't deactivate buy boxes. It's so frustrating. It's like that. Yeah. And then the potential high pricing errors. I'm like, gosh, man, I get it, but man. Awesome. So with that note, I think we're going to end it here. Great questions. Again, thank you everybody for joining today. This was fantastic. Got to dive deep into a lot of different things, which is awesome for us. We get to geek out. We do this every Wednesday from 2 to 3 p.m. EST. So bring your friends, join us next week. It's open office hours, so there's no real format here outside of we just answer any questions you have. If there are none, we'll just geek out. Typically for me on AI, which I already did in robotics. But we like to be able to dive deep into all things repricing, Aura, selling, sourcing, all those different things. So yeah. And if you're going to AMZ United, we will be there. We're sponsoring a booth there, as well as I'll be speaking on repricing as a whole. So come say hi. I just ordered a crap ton of t-shirts too, which is going to be awesome. So we're giving out t-shirts. If you're going, come hang out with us. But with that, Casey, any parting words?
No parting words, folks. Great chat as always. We'll see you next week and enjoy the rest of the week and your weekend once we get there.
Awesome. Thanks, everyone.